Good morning, everybody. Today is April 15th, 2021, and we are going to be taking a look at gold, silver, the S&P 500, and Bitcoin. We look at that. Today is breakout day for gold. I am super excited to see this. This is what I was hoping to see, which is that we managed to start trading and break above this descending moving average, the 50 period, and this yellow line, which was at $1,756.60. This breakout is significant. Now let's see if we can close above this line. If we close above this line and hold a full body candle above this area, I think we have the chance to actually break out of this channel now and go back and retest this $1,800 area. Do note that back here is the previous low. This right now is looking like the back test of the bottom of this low. So keep that in mind. If we get rejected by this resistance cluster, we will fall down hard. But bullish on gold for the day so far. Silver, very bullish on silver. I'm liking the fact that it's tracking with gold, and I think 26 is on our radar. I think we're definitely going to hit 26 before we even think about hitting 22, that's for sure. So I am waiting to see if we can close above this moving average or if we are just going to get stuck here for the day. It doesn't really matter. Silver's bullish in my opinion. The S&P 500, I am yet again another bull for another day of another set of all-time highs. Money printing does wonders for the stock market. And I'm going to stay bullish on the S&P 500 until further notice. All right, going over to Bitcoin, not gold. Let's see. Oh, that was the daily. I wonder why that got switched. Anyway, on the daily on Bitcoin, I like that we're having a little bit of a pullback. We did touch the overbought position. We're pulling back slightly. We still have a 6. This is a decent 5. I think we can print our 9. 7, 8, 9. I don't think we're going to hit this target on this breakout. What would be interesting is if we set a brand new count above the triangle and then start moving to the upside. This 9 count really needs to be adjusted so to here, but I'm not really interested in doing that. So what I'm going to do is I'm going to set this off to the side until I see another green 1 and green 2 combo, and then I'll move it over. But my target is still set on the breakout of this triangle to the upside and in the mid to high $70,000 range. 82 is my most likely target right here. My most likely position to hit is this $82,000 area. Now we have new lines that need to be moved. The break above the bodies of this 4 and 5 is what's going to set me off for another bullish trend. The break back into the triangle is a little bit concerning for me. As long as we stay above there, I think we're good. And then it's the breakdown of the triangle itself that I'm going to get more and more concerned. Now I still have a target of $82,000 on the table. I'm not walking away from that, not anytime soon, unless we are closing below this yellow line and challenging this low here. Going over to the 4 hour. The 4 hour is looking great as well. We broke out of this little descending triangle. We hit our target. We pulled back. So we can delete this. We can clean all this up. Excuse me for 1 second. All right. So going over to this, we just need to clean up the charts. This 4 hour has a little bit too much going on with it. So let's try and get these things as clean as possible. All right, same deal over here. We actually only need to break this red right there. We do need to be concerned about breaking down right here on this yellow line. And there's not really a problem until we take out this previous low down here at 58. That's the area of real concern, is if we take out this previous low right here, this swing low. And that is also coinciding with the previous top structure. Now, what line is the most important? It is that line on the 4 hour. The 4 hour, this line is the most important. This line no longer has much validity. If we want, we could try and extend this over so that it was something like this, and delete this line so we know we have a much larger trend intact right here. And let's just it's a little bit difficult. I don't think we're going to get that third touch. We're a hair off, but that's okay. Yeah, that's fine. But this is the trend that needs to stay intact right here. This area is good. The RSI, this is something to be paying attention to. So we're going to be looking at the RSI a little bit closer right here. We're kind of in that area where we're just about to dip down out of the Goldilocks bullish zone that I really like, which is this green area. I would like to see us either go flat and consolidate in this area or just start trending back up to make all-time highs again. We can go flat, in my opinion, all the way. As long as we hold above this yellow line, we can go flat until the 27th of the month. So the 27th. So we can sit here for 12 days, and I wouldn't have a problem with that. And that would give us a nice bedrock of support that we could then rally off of for a 20K move. Now, this trend back here is also interesting in the sense that we are kind of riding along that. I don't care for that one as much as I care for this one, because this area has shown that this was the triangle support that broke to the upside. The MACD is looking good. It did cross over, but we're still in the positive territory, so I'm going to hold steady on that. The RSI I'm still bullish on. So I'm bullish on both these indicators. The volume. Let's take a look at the volume. The volume's doing okay, but this is the problem when liquidity dries up. The order book, when there's too much demand and there's not enough supply, it doesn't take much volume to run the order book into higher price structures. And now that people are talking about, the mid 70s, high 80s, that's a comfortable notion psychologically that we're starting to get people aware of where to potentially take profit. So there may be people at 70,000 whose trading scheme says take profit there. If I was a gambling man, which I'm not, I'm a technical analyst, I would be looking at maybe 71, maybe 79, which is 80,000. 80,000, $79,000 to $82,000 is that comfortable area. I would put 79 and 83 in this box structure of where I think that it's acceptable to take profit. And the reason for that is we don't know where the market structure is going to be. So I would say 79 to 83 is this really nice area that I think has the potential for some serious profit taking. Now, the great news is that if we just rode along this trend line, we would be at 70K towards the end of next month. So it would only take us, 2 months to just grind our way into 70,000. And that's important to note as well, because I would be okay with that. As long as we're steady and going up, I would prefer to just see us go bounce, 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 and just have this nice little grind to the upside, and then followed by, we're going to take some profit and, a 30 to 40% correction from there. Ideally, I want a 45% correction to a 48% correction on the high. So wherever we go, I do not want to go above 52%, but anything under that is anything in the high 40s and low 50s. I mean, like 50, 51 area. Would be okay with me for an initial large pullback off of a bubble top. All right, everybody. I think that's everything we have to talk about right now, and I will talk to you guys tomorrow. Have a good day.